Hello everyone and welcome back to the Cedi Investor. In today's video, we are going to talk about GSE Bank. The company is now trading at 13.5 Ghana cedis and it is up. Look at the year-to-date trend and it is up more than 100%. It started off the year at 6 Ghana cedis 37 pesos and it's now trading at 13.5. So if you bought this stock at the beginning of the year, you'd have doubled your money. Basically, that's essentially what this means. But despite this company being up 100%, I still think this company deserves to go a little bit higher. If we go onto the Cedi Investor page, we can see I made a video about 2 months ago why I'm still bullish on GSE Bank. This video I made 2 months ago and I gave my reasons and thoughts about GCB. Let's take a listen. GCB is now trading at 9.5 Ghana cedis and it is down from 10 Ghana cedis at the beginning of the week. And this is very interesting because when you look at Ghana's banking sector, GCB is one of the strongest banks in Ghana. It has one of the highest net profits, highest revenue. It has a high capital adequacy ratio and their non-performing loans ratio has just been coming down and down and down. So it's very controversial to see the share price coming down. Now some analysts are saying that they believe the downtrend is because of profit taking, reallocation of capital from fund managers, and concerns about future performance when you look at the regulatory requirements that banks have to go through. Now, I do believe in some of the points the analysts made. GCB is up about 55% year to date, so it has had a massive rise. And yes, some investors will be satisfied enough to start taking profits. So I do believe that some of it has to do with profit taking. But where they talk about regulatory requirements is where I think I have a little bit problem. Because when you look at the banking sector, like I said earlier, GCB is one of the best. We have a lot of banks that are failing to meet or perform above the regulatory requirements that the BOG has set. Even looking at the capital adequacy ratio, GCB's ratio is one of the best in the industry. We are outperforming a lot of banks. And even when you look at their Q1 2025 report, you can see that they are growing revenues. Whilst even a company like EcoBank grew its revenue at a marginal rate, GCB, being one of the big banks, is still growing its revenue. So personally, I still believe in GCB, and I think that even though the price has gone up a lot this year, it's still very undervalued, especially when you compare it to other banks like Access Bank and Standard Chartered in the industry. So basically, at that point in time, the company was trading at 9 Ghana cedis, and I said that despite the massive appreciation, about 40 to 50% appreciation, I still felt that the company was massively undervalued, especially if you compared it to other banks like Access Bank, Standard Chartered Bank. I felt the company was massively undervalued, and I'm here to tell you again that despite the company rising 111%, it is still massively undervalued. Now, it is not as massively as undervalued as it was previously, but there's still way much upside for investors in GCB. My thesis on this company has not changed at all. The company is still the leader when it comes to revenue. It is growing its revenue faster than any other bank. Probably the closest you would say is EcoBank, but it's still growing revenue higher than EcoBank. Looking at the capital adequacy ratio, very good at 20%, showing how financially strong the company is. Non-performing loan ratio, and this is what I was really looking out for, and it reduced massively to about 13.8%. I'm waiting for Q3 reports. I think they'll be able to end the year off, below 10%. And if they're able to do that, I'll be more bullish on the company. I think my only concerns was with, the low interest environment where I wanted banks to switch more into, giving out more loans, because interest rates on investments are coming down. But that's not really a GCB issue, it's more of a banking problem. Probably the only difference is that they won't be growing it as fast as previous years. Even when we check the comparable company analysis, when I did it back then, GCB's ratio was like 2.5 or something, and I got an intrinsic value of about 15 Ghana cedis. the company's P ratio has now gone to like about 2.7, so it's now a little bit higher, but it's still not at that 15 mark. So based on this, we can see that even though GCB is now trading about around 13 Ghana cedis, it's still trading at a low this in P ratio compared to the other banks. Standard Chartered is trading about 5.3, Access Bank is trading about a 5.3, Republic Bank also about a 4.1. So honestly, seeing these two companies, EcoBank and GCB, trade at a lower PE compared to the other banks, I think it's quite concerning. These are the two biggest banks in Ghana. So I think if not for anything, they should be trading at the same multiple in terms of PE as the other banks as well. So a minimum of like a 4 PE. And if GCB should get to that PE ratio, then the intrinsic value definitely would be even way more, around 20-25 Ghana cedis. So all in all, I'm still quite bullish on GCB. I still think it's the best banking stock in Ghana. And if I'm to choose any banking stock, that's probably the one I'll go with. Now finally, we end off with a comment from one of you guys, and he's asking me to give my analysis on Societe Generale. Now before I do that, I want to say something. I think sometimes when I'm talking about other companies, it might seem like maybe the companies are some bad companies, or like because maybe I'm not investing in them, like it might seem like they are not as good or something like that. But then I feel like maybe it's a little bit of a misconception. I think it comes back to the way I invest. My investment strategy is to focus on high quality companies that are growing very, very fast and giving returns back to shareholders. I've said it multiple times in plenty videos, so you can even go through them. And I think this even reminds me of a saying from one of my favorite investors. And he said, the opportunity cost of investing in one particular company is the returns you could have made in another company. So if let's say I'm investing into GCB, the opportunity cost of investing in GCB is the return or the amount of money I could have made from investing in another company. So I think that I hope that makes sense. Like if you invest in one particular thing, you are in a way losing ground or returns from another company you could have invested in, right? So I'm invested in GCB. If Societe Generale does very well and make a lot of return, that's my opportunity cost. I've missed out on that because instead of Societe Generale, I invested in GCB. So at the end of the day, when it comes to investing, just because I'm not invested in one particular thing does not necessarily mean it's a bad company, but probably I just feel like there's a better opportunity or a better return for my money in investing in maybe a different company. So maybe looking at the banking sector, I believe the best bank and the one that can give you the most return is GCB. I'm just saying that, like, maybe that's what I believe. So if that's my belief system, then I'm going into GCB. My opportunity cost of investing into GCB is the returns I could have made in another bank like Societe Generale. I hope that makes sense. So all in all, Societe is a good bank. Its interest income went up. Net interest income also went up. Capital adequacy ratio is very, very good as well. Non-performing loan 17.9 could be very, very better. It's still above the 10% BOG requires you to be under to be able to pay dividends. So hopefully they're able to fix that before the end of the year. But it's a good company. They are increasing their revenue, providing some sort of value towards shareholder. But when it comes to my investment strategy, looking at the banking sector, I do believe there are better banks out there, which over the long term, because I am a long-term investor, looking at the next 5 to 10 to 20 years, I do believe that other banks are well positioned compared to Societe Generale for investors to benefit off of. So, that's just my thoughts. But then again, it's based on my opinions. What do you think about GCB? What do you think about Societe Generale? Are you invested in any of them? I would love to know. Make sure to leave a like as well. Comment down below. Subscribe to the channel. I really appreciate it. Until we meet again, have a wonderful and blessed rest of your day. Peace.